With about $1 billion under management, David Winter's Wintergreen fund has had a pretty decent year, up more than 30%. He joins us now to talk about that and his investment strategy. Thanks for being here, David. Appreciate it. Obviously, we're talking right ahead of Berkshire Hathaway's annual meeting this weekend. You're sort of a Buffettite, if you will. You'll be in Omaha, as will we. And you're a big shareholder in Berkshire and a range of companies, from Swatch Group to also British American Tobacco. What's sort of the common denominator? What attracts you to all of these very different companies?
We're interested, Poppy, in looking around the world for companies that generate increasing amounts of free cash flow. And we have a basic idea that if you have mountains of cash that grow in multi-currencies, it reduces your risk and creates more upside.
But yet you look at these companies, and what does tie them together is they're all really consumer-focused companies, whether you're talking about watches or with Berkshire insurance or rugs or bricks or home paint or underwear, and then tobacco, the absolute consumer discretionary product. And the consumer is still in question right now in terms of their buying power, right?
Absolutely. But people continue to do what they like to do. And
smoke.
People will smoke. We don't advocate it, but people smoke. Girls will continue to want to buy clothes. Jewelry is a constant. I mean, when you think about human adornment, it's gone on since the beginning of time.
You look at the exposure that you have to these consumer staples, and I think one of the questions is, across the board, which of the holdings is the most ideal right now? What's the best performer for you now?
We think Asia is really the place to look. When you see what the economic growth is, the desire that people have in that part of the world to have everything we have.
Sure.
And so, that's why we own Jardine Matheson.
Right.
Because it's good assets, trades at a discount.
You look at a lot of the property holdings in Asia, and you look at some of the people that have bearish views on China, particularly look at Jim Chano saying there's a huge real estate bubble forming here. I mean, are you concerned at all about a commercial or residential real estate bubble in Asia and China in particular, considering your holdings in the region?
Absolutely. I mean, I worry about everything, but I think that there's a real high probability that, people will continue to eat chocolate bars. And, when you were a little kid, a chocolate bar cost less than it costs now. And so that's why we like Nestle.
You also like Coca-Cola, just like Warren Buffett does. You're a big shareholder in that company. They've up about 17% over the last 5 years. I mean, what is it about Coke and not its competitors that keeps you interested?
Coca-Cola is almost everywhere. My business partner, Liz Cohenauer, and I were in Africa in November, and we went to Senegal. And they were so excited at Coca-Cola Senegal because they're serving 20 servings of Coke a year. And they look at Mexico, and they're serving 600 servings. So the potential to serve more Coca-Cola around the world is phenomenal.
Was there anything that you were tempted to buy but didn't because the economy still is in question?
Well, we actually did do some upgrading. We sold a few securities. We bought more of companies that we think have great potential. Mm-hmm. We did upgrading. So we did sell a few things, and then we added to some new companies. And one example would be in Canada, it's called Birchcliff, which most people have never heard of, which is a natural gas play trading at a massive discount. Mm. And we think ultimately we'll make a lot of money. You and T. Boone Pickens like your natural gas, I suppose. What about banks? I mean, a lot, I talk to some banking analysts who say even Goldman's a great buy right now. You talk to others that say, if you don't have a big appetite for risk, stay away from the banks. We don't know what banking regulatory reform will bring. Right. We have some sort of specialty financials. Berkshire Hathaway is effectively a specialty financial. We own another insurance company in Canada called Fairfax. And we own a few others, but we aren't in the mainline banks. I think the U.S. is very mature, lots of debt. I think it's going to take time. And so we think there are other places to have your investment dollars that we think have a lot more upside and less downside. Could you tell us about the best investment advice that you ever received? I think the best investment advice I've received is to do the work, to focus on, the underlying fundamentals that matter, and not get distracted by all the noise.